Here's why you should send money home with Rewire. It's easy, and it's in your language. It's fast. Most transactions are completed instantly. The rest take up to 1 business day. It's safe. Rewire complies with strict regulations to protect your money and privacy. Plus, customer support is available 7 days a week in your language. Oh, and your first money transfer is fee-free. Open an account with Rewire today and manage your money your way.
Hi, I'm Rini. Team Rewire welcomes you to this session where we discuss about investing in Indian financial markets in the current scenario. Today, I have a special guest joining, Mr. Girish Mane. He's the founder and director of Reliance Trading Academy. He's a full-time trader for more than 12 years, and he started teaching in June 2020 and now is a full-time trader, trainer, and mentor. He has taught traders in India, USA, Canada, Netherlands, and Belgium. His educational qualification is BTech Electrical Engineering. So he'll be here to share some insights and be happy to answer any questions you have on the topic. Let's welcome Girish. Hi, Girish.
Hi, good
Great to have
morning,
you.
shall I say? Good morning or good evening?
It's afternoon.
Good afternoon, yeah.
Late
So,
afternoon.
good
Yeah.
afternoon and happy Diwali to everyone once again. And
Happy Diwali.
please feel free to ask all the questions, all the queries at any point of time. I want these sessions to be interactive. So, please feel free to, like, even if you feel that your questions or doubts are very silly, please feel free to ask them. That is my request, you can say.
Great. So,
So,
Girish, the
and
stage is all yours now.
yeah, and I once again like to thank Rini for giving me this opportunity to like share and to present myself in front of like this group of Indians in Europe discussing money matters, and I'm going to talk about the topic where money matters the most. Okay, I'm going to talk about financial markets.
That's great.
So let me start. I will start the screen sharing. Okay. Okay. So it's all about financial markets and how you can make it your secondary source of income. So I'm not going to take too much of your time, but just to introduce about what financial markets are. But to start with, I have a topic, like these are the topics about which I'll be talking about. So the first topic is myths about financial markets. And obviously we all have heard a lot about financial markets, and most of the times we have heard that financial markets are very risky, people lose their hard-earned money and all sorts of things. Okay, but yes, where is there any segment where there is no risk? You step into any business, if you step into that business without proper knowledge, obviously that segment, that sector is risky for you. But as far as financial markets are concerned, if you get proper knowledge about risk management and money management and you apply the strategies after learning them, then you can predefine your risk and you can like calculate your risk well in advance and accordingly take your positions. Then the second myth is it requires knowledge of finance. See, there are a lot of examples, like lot of examples wherein people who were not even having any educational background related to finance. If you talk about myself, I'm an electrical engineer, okay, but I'm training people who are from all different segments. Like there are doctors, there are engineers, there are a lot other different sectors, but they are doing well in finance sector after doing like after learning the technical analysis things and all. So all it needs is application of a basic logical reasoning and knowledge of technical analysis. So I'm emphasizing more on this one uh, topic, that is technical analysis, or rather knowledge of technical analysis. Then the third myth is it requires big amount of investment to start with. Absolutely not. This is a very biggest uh, myth about financial markets, that one will have to invest huge amount of money to start in financial markets. But no, if you ask me personally, everything depends upon individual's risk appetite. Okay, and if one wants to start very small or tiny, I can say that one can start with even as much as 1,000 rupees, or in fact even less than that. My personal opinion always, like for the people who have asked me how much they should start with, obviously this is the very first question that I come across most frequently. So people ask me how much they should start with. My answer is, you should start with the amount that you will be fine to lose. Okay, because it's a learning, like it depends upon your learning curve. Okay, so you don't invest all your hard-earned money at the go, but you learn with experience. And once you learn with experience, obviously before stepping into, you have to learn the technical analysis part and lot of other things. So once you learn, you start with the minimal amount that you are ready to risk or ready to lose. And once you spend time, you give time to the market will teach you a lot of things, and you grow with confidence, with experience, and gradually you can increase your investments in the market, depending upon how you can learn and how you grow with the market. So this is what I was more emphasizing more on. It was like about technical analysis. So there are two types of analysis. Basically, one is fundamental analysis and one is technical analysis. I am going to talk more about technical analysis. But yes, briefly, I can tell you what is fundamental analysis. Fundamental analysis is all about like um, doing study of the past performances of the companies, like how much their business has grown over past, say for 5 years, 10 years. What is their profit ratio? What is their turnover? Right? What is the whether the margins are increasing or not? What segment that company is catering into, like whether they are into auto sector or fine or like say finance sector or pharma sector. So whether that sector has any uh, growth in future, do they have any competitors, and all those sorts of things that are considered in fundamental analysis. But as far as technical analysis is concerned, it is very simple, very easy, because obviously to do your analysis by using fundamental analysis, what happens is that we get to, like the companies, they declare their performances, like results, you can say that quarterly results, like profits and losses that they have incurred in 3 months. So they declare the results every, like quarterly results after every 3 months. And by reading their whatever they have mentioned in their quarterly results, that is what fundamental analysts will use. And they make, or they come to the conclusion whether they want to stay invested in that company, or they want to like reduce their investments in that company or increase. Okay, but fundamental analysis, as far as I am concerned, it is very difficult to understand, because there are lot of factors, like uh, there might be some change in the finance, or rather you can say tax structure of any raw material. Okay, uh, import or export duties on any raw material. There might be any change in the any laws, okay, related to the sector that the company is catering to. And it is very difficult for a common man like you and me, at least for me, to identify what effect that is going to make on the performance of the company, or whether it is going to help the company, or whether it is going to reduce the company's profits. Okay, but when it comes to technical analysis, it is very simple. Most of the times I give example of a cricket match. When during the cricket matches, we know that the graph is plotted where the performance of first batting team is plotted in a graphical manner, and then when the second batting team starts playing, so their performance is also plotted on the same graph. And by comparing the progress of second inning, or for that matter first innings, we can sort of analyze and determine what maximum score they can, what maximum score they can reach after speculated number of overs, and whether one team can win or one team can lose. That is how simple we do it during the cricket matches. So similarly, in financial markets also, performances of the companies are plotted in form of graph, or which are known as charts. Okay, so technical analysis is more of learning how to read the charts. So for example, I will like to open one chart for you, which is very common name amongst most of the Indians. Okay. So Reliance, this is the chart. So technical analysis is more about learning how to read these charts and to identify what what we can expect the price, where we can expect the price of that particular asset, okay, to go either up or down from the current levels. And depending upon what we analyze, depending upon what we learn from these charts, is what we derive, and we make our decisions whether to invest in that company or reduce our investment in that company. And for that matter, we, like for the beginners, we can also find out best opportunities by reading the charts. We can find out best opportunities, like what should be the best price to invest in any particular company. We can set alerts whenever price of that particular company or that particular asset reaches to the desired level. We can create an alert, and it, like the alert will be set in your broker's account, and whenever the price reaches there, it gives you a pop-up, and then we can check other parameters and we can decide whether to invest in that, like that company at that particular price or not. So this is the first part, that is price action, that is candlestick patterns. I have mentioned it in very brief. It is a very big topic though. Then the second part is indicators. There are a lot of indicators that people and the technical analysts use. One of the very common indicator is RSI, relative strength index. Okay, so a lot of people use this, but as you can see, when I click on this button here, and this is a tradingview.com platform which is free. Okay, so technicals, you can see there is a list, huge big long list of indicators that technical analysts use, okay, to like make their decisions. Okay, so indicators is the second part, or you can say second arm of technical analysis we can use. But obviously we have to learn how to use these various indicators, and how to interpret the data that is put across. Okay, indicators is something which is plotted on the graph, either under the main price bars, this is called as price actions, or there are some indicators which can be plotted on the price bars itself. Okay, so this is Bollinger Bands which I have just plotted. Okay. So by using such a combination of more than one indicators, you can create a strategy. Okay, so you can create a strategy by using 3, 4, or 5 different indicators, and you can set a criteria as if, like whenever there is a buying signal in more than say for example, if you are using 5 indicators, you can set a criteria for yourself that if whenever, like out of 5 indicators, whenever there will be a buying signal in at least 3 indicators, only then I will enter that trade. Okay, so you can set such criteria for yourself. Okay. Then there is the most important topic that one has to learn in the technical analysis is derivatives data. Derivative data consists of like futures and options. Futures and options basically are, you can say, it is more of speculation market. Okay, that people speculate upon the prices of any particular asset, may it be any company or any index. Okay, then we can use this derivative segment to speculate on the prices. But these are time bound contracts, and futures and options, even though they are like, I call it them as twins, but they are the twins which don't look alike. Okay, even though they are born together, they expire together, but they have very few things that they have in common, but otherwise they are very different from each other. So specifically talking, futures are just like, you can say it is like a wholesale business wherein you can buy and sell in huge quantities. You cannot buy in very small quantities like one stock or one share or two shares, but you have to deal in bulk. Okay, and those contracts are time bound contracts wherein you get the advantage of or benefit of credit. Okay, so for example, in terms of Indian rupees, I can tell you that if you are buying any asset, say for example, if you are buying Reliance Industries, so the quantity, minimum quantity that you can buy in futures is 250 shares. Okay, so to buy 250 shares of Reliance, how much money it will require as per the current price? Let us consider the current price as 2450 multiplied by 250. So the amount required will be around 6 lakh rupees. Okay, but if you are trading in futures, it will not need 6 lakh rupees. You will get a credit and there will be a time limit for you to how long you can hold your position. Okay, so you can get a credit and you can get this 250 shares for not more than 2 lakh rupees. Okay, so you get a benefit, or you can say you get a credit of 4 lakh rupees. Okay, so Zerodha is one of the brokers. We have very commonly used brokers. So just to show you how much money you will require to buy one lot of Reliance, it is called as lot, and lot size for Reliance, as I said, is 250. Okay, so if you decide to buy one lot of Reliance, so it will require only 1,42,000 rupees, and the amount we calculated as per the current market price was 6,12,000. So if you want to like speculate on the price of Reliance for a short period, say for example 1 month or 2 months or 3 months, instead of investing huge amount of 6 or 6.5 lakhs, you can use these futures contracts. And if your analysis is right, if you end up on the right side, obviously if the price goes up, you benefit. But then here you have to be very careful because it is a double-sided sword. Okay, if your analysis is right, if the price of the asset, so for example, when I say asset, Reliance Industries is an asset here right now. Okay, so let's say if you bought Reliance Industries at the price of 2,450 and the lot size is 250, so if the price of the asset, that is price of Reliance Industries, increases by 1 rupee, your profit is going to be 250 rupees. And if your target, say for example in 1 month's time, if your target is 2,600, what will be your profit? If your target is 2,600, your profit is going to be 2,600 minus 2,450 multiplied by 250. Okay, so your profit, if your target is achieved, your profit will be 37,500 rupees. Now coming back to the funds which were blocked, okay, funds that were needed to enter this trade, the funds required was 1,42,000. So I can calculate the return on investment. Okay, so return on investment is 26% if your target is achieved. If your analysis is right and price of your asset that you have bought reaches your target, then your return on investment within whatever time it takes is 26%. But when I say that this segment is like a double-sided sword, what if your analysis goes wrong and price, instead of increasing, what if it goes down? So this is what most of the people are afraid of, and they say that financial markets are risky. But if I say that when you learn to do the analysis, can I not set my stop loss? Like can I not decide at what if my analysis goes wrong? I will exit my position if the price goes down instead of going up. And I can set my stop loss, say, at 2,420. Okay. So my buying price is 2,450 and I will exit if the price reaches 2,400 and say 19. Okay. So what is my loss? My loss is 31 rupees multiplied by 250. So I can limit my loss to 7,750 and I will accept that my analysis was wrong. I will accept that loss and I will secure my funds for the next opportunity. Okay. So this is how you can, in advance, you can set how much risk, or you can decide how much risk you are ready to take, and depending upon individual's risk appetite, one can decide how much quantity they can buy or sell. But this, as I said, this is very much risky when it comes to derivative segment. But if you don't want to trade in derivative segment, if like you want to invest in like say long term perspective, my target for Reliance Industries is 3,000 rupees. This is like my personal opinion. Okay, I'm not recommending anyone to buy it, but still my personal target in long term for Reliance Industries is 3,000 rupees. So I can stay invested in Reliance Industries till the time it reaches my target. So if I have some surplus amount, okay, my from my savings, instead of keeping that amount in any other instrument like fixed deposit or anywhere else, I would rather invest my money in Reliance Industries, and I will expect. I not expect price of Reliance to touch the 3,000 rupees a share within a year. Yes, I can definitely. Okay, so I can get 22% returns on my investment. And is there any limit how much I can invest? No, it depends upon how much I want to risk or how much I want to invest. If I want to invest only say 10,000 rupees, how many shares I can buy at the price of 2,450? I can buy 4 shares. Okay, so whatever I invest, I will get my returns in like proportion to my investments. Okay, and here also as I said, my risk will also come down drastically. If my stop loss was 31, what is my risk? Because I have bought only 4 shares, my risk is only 124 rupees. So depending upon every individual's risk appetite, one can decide how much money they want to invest in one stock. Okay, if you ask me personally, I would always recommend to diversify your portfolio and select different segments. There are a lot of segments like auto, automobile, right? Then finance, then pharma, then IT. Okay, there are a lot of different segments. So every segment of the markets or every segment have their own good and bad times. Okay, so depending upon which sector is performing better, which sector is doing well, you can shift your investments from one sector to another, or you can increase or decrease your investments sector wise periodically, depending upon which sector is good or bad. Now, when it comes to options, options is heartbeat of the market. Options is heartbeat of the market, and it is like a deep dive into uh, analysis of or technical analysis. And you can say like, if price action is your sword, knowledge of options is sharpness of your sword. How precisely you can decide, like how precisely you can analyze where at what price at what level you can enter and what level you can exit, like book profits or losses. What should be the best price to enter that particular stock and what should be the best price to exit. More, it also helps us, like knowledge of options also helps us to understand the market sentiments, whether the markets are bullish or bearish, whether the um, health of the market is good or bad, whether it is good time to stay invested or whether it is better to exit. Okay, and in current global situations the markets are very volatile. So knowledge of these options, obviously this knowledge can also, like in short term, you can use this knowledge to do some intraday trading or short term swing trading, for which you are not like interested in staying invested for very long time. You can buy or sell these stocks depending upon like your analysis for a shorter version of time, say for 1 week, 2 weeks, 3 months, 1 month, like that. Okay, so you can use this options data, and this is, as I said, it is heartbeat of the markets. Okay, options data is heartbeat of the markets. If you learn how to read options data, like you will be able to identify lot more about the markets, at what price you should enter. If even if you are not invested, you can just do your analysis and tell that how far it will go, either and at the lower side or on the higher side, which stock can go how far below or above the current levels. Okay, then what are the instruments? As I just said, what are the different instruments that are available from long term perspective? Obviously the equity segment is available for you. Okay, equity segment is like retail segment. Okay, you can decide how much to invest, and you are not looking for a short term, your perspective is not short term, you are investing for long term. Okay, say maybe for 5 years, 10 years, 15 years, like that. Okay, So you can find out the best opportunities, and obviously when the markets go down, you get lot of good opportunities. I am going to tell you why Indian markets is the best choice right now. I am going to compare it with some other markets. Okay. Then derivative segment, as I said, derivative segment is like it consists of futures and options. So in futures there are time bound contracts, right, wherein you can buy or sell the assets depending upon your analysis. Whether if you think that the price of asset is going to go up from the current levels, you can buy that assets or futures contract of that asset. Okay. And options is also what you can use to make consistent money. Okay. Then obviously if you want to be more of like a relaxed person, if you don't want to take those any little risks, you can have a choice. You can use the choice of investing in mutual funds. But on an average, as per my knowledge, mutual funds can give you returns of around 14% per annum. But if you learn yourself, if you learn technical analysis, if you can make your own decisions, you can easily make about 52% per annum of your investments. But obviously it comes with practice, and um, more time you give to the market will give you more knowledge, and over a period of time you can easily make 52% at least per annum of your initial investment. Okay, per annum. And that is like very conservatively I'm talking. Okay, you can, one can make lot more than that, but being conservative I'm talking about 50 to 52%. Okay. But mutual fund, because they have lot of restrictions, uh, like in which assets, how much percent of funds they can invest in which sort of assets. They have lot of restrictions on them. And that's why they cannot withdraw the money even if the markets are falling, like it happened during pandemic when the markets were falling drastically. Being, because they were having a lot of restrictions, they were not allowed to withdraw their money from the markets. Okay, so that's why they had to bear the losses, even when everybody knows that the market is going down. They had to bear that losses, and that is what causes mutual funds to give better results. Okay, so on an average it gives you around 12 to 14% of returns per annum. But if you learn yourself, on an average you can make 50 to 52% per annum. Okay, and that is obviously when you learn technical analysis. Okay. Then there were some questions, or I will first talk about what are the steps. If you, once you decide to step into financial markets, there are only three simple steps. First is to learn technical analysis. Okay. And lot of people, they ask me how much time it will take. See, this is a continuous learning process. Market is the biggest teacher, and it will teach you new things every day. Whenever you open your screen and sit in front of the charts or sit in front of the data, you get to learn new things almost every day. Okay, it is a continuous learning process. But before stepping in, you have to learn the technical analysis. And there is a very common misconception that one can learn from free YouTube channels and all. I don't 100% agree with it. Okay, because I will not say that whatever you get on YouTube or any such you can say media. Okay, but it is not properly designed course. Okay, you get to learn things in cuts and pieces. And moreover, there is one issue which is very concerning. Okay, is that whoever makes these videos, they try to make these videos very very attractive, because their purpose of making videos is not to educate, but their sole purpose is to get maximum views, because that is what monetizes their video. Okay, they earn revenue if the views are more, if they get more views, more subscribers, more likes. So depending upon number of views, they earn from the videos that they post. And trying to achieve maximum, what they do, they make huge unrealistic promises. Like, if you use these three indicators, you will never lose money. But believe me, it is like, if there was any such holy grail in the market, everybody would have become Warren Buffett. If not Warren Buffett, at least Rakesh Junjunwala till now. Okay, at least I would have definitely become one. Okay. So there is no holy grail, and market is full of, you can like, I will term it as, it is a game of probability. More time you give to the market, more time you spend in front of the charts and understanding what is happening with the market, gradually you will learn, and then it will lead to success. So I will request you all not to fall prey to any of such false promises made on YouTube channels. And then there are also a lot of different courses which are available, wherein they promise huge things. But I have personally seen, I have like been there and seen that. Okay, so I have seen what most of the tutors they are doing. They have downloaded or taken screenshots from Google. They have created PPTs and they just read PPTs. Okay, they don't have their own uh, like their own content or their own thought process behind what they are reading. Okay, what they are doing is they are simply reading the PPTs. So I want you to stay away and to save yourself from all such false commitments. And there is only one criteria to identify. Okay, the one who promises you big things in small time and small investment, stay away from it. That is the one criteria which I would suggest to make your decision, which will help you to make decision where to invest your time. Forget about investing money, where to invest your time, because time is also very important. Okay, so there are three steps. One is to learn, and once you learn, obviously I don't expect anyone to like, when I learned how to drive a four-wheeler. Okay, and when I got the, even after I getting the license, even after I got my license, even after that I was not able to drive the car on the highway at the speed of more than 40. Okay, even after getting the license. So even after learning, I will have to keep myself very safe and take very small tiny little steps, and gradually increase my investment and gradually increase my speed, you can say. Okay, similar to, it is very much similar to the driving experience. You don't drive your vehicle right on the highway, right in the middle of the highway at the speed of 100 immediately after learning. Okay, how you do, at some point of time, like initially you will have your trainer, your whoever might have taught you, your elder brother, sister, like your parents. They will assist you, they will sit next to you. Okay, and you will drive in their guidance, and slowly gradually you will gain the confidence to drive yourself. Okay, and then some point of time you will take the vehicle alone. Then also you will be driving very slow, and gradually you will start driving from the middle of the road at the top speed. And then at some point of time you will reach the level wherein even if something comes across your vehicle, automatically your foot goes to the brake, automatically your hand goes towards the horn. Okay, and this all those things happen automatically. Similarly in trading and investing also, after learning you will have to take the steps slowly and gradually, and you will definitely need mentoring from the trainers. And you should feel free to keep in touch in your trainers and mentors during this process of learning. And once you are confident enough, once your performances are consistent, then you can thank your trainer and practice yourself all by yourself. And by applying all the knowledge that you have earned, you can enjoy the rewards. So there are only three simple steps. One is to learn, then to practice and backtest, and the third one is to apply and enjoy the rewards. Okay, then the questions. Okay, because I'm addressing to the people, most of the people here will be NRIs. The very common question is, can NRIs invest in Indian financial markets? Yes. If you are already invested, you can still get in touch with me. If you are not invested it, if you want to open a demat account, you can get in touch with me, and I will assist you to open your account. Okay, all you'll be needing is an account with any bank in India, and address proof like your current address in whichever country you are staying, and your Indian address. And there will be some other documents required. I can assist you to open a demat account with a reputed broker in India, and you can start your financial journey in India. Okay, then that's it from my side, and I'm open for questions. Okay, I wanted to have few more seconds. Like, I wanted to just show you the comparison of Indian markets as compared to the American markets, and why I am very bullish on Indian markets. Okay, why I want you all to be very proud of this one thing. Okay, this is Nifty, which is very commonly known index. Okay, Nifty 50, and this is Dow Jones. Okay, this is Dow Jones, which is India's industrial average, which is like an index of, you can say, US markets. Okay, so if you compare the prices, what was the lowest price of Dow Jones achieved on the date of uh, let's say 17th June 2022. Okay, 17th June 2022. And what was the highest price where it was? The previous high that was achieved obviously after the pandemic levels. Just we'll say round figure, it was 37,000. Okay, and the lowest price which was achieved, I'm not considering the recent ones. Okay, the lowest price I will say was around 29,500. Okay, let us round it up to 29,500. Okay, what happened after that? If you just compare this with Indian markets on in like June 2022, what was the lowest price achieved by Indian market? Okay, so this is 17 June 2022 precise date, and we were at somewhere around 15,000. Okay, we were at 15,000. After that, what happened with US markets? They bounced back. What was the date? Till 16th August 2020. Okay, they bounced back and made this high. Okay, somewhere around 34,000, and then they started falling. The US market started falling. Did Indian markets also start falling from this date onwards, like 16th August? Let us check. 16th August. So Indian markets only made a very small fall and recovered back. Then again they joined the US markets. They made a small drop and again started recovery. Did we ever came anywhere close to the previous lows that were achieved in June 2022? No, there was a big difference between the low achieved on or during June 2022. There is a huge gap. Okay, we have nowhere came close to these lows. But can you see the American market? These were the lows during June 2022. Okay, and what has happened when they started falling? They have went far below the previous lows that was achieved during June 2022. Okay, and then they have started recovering only recently, few days back. They have started recovering. Okay, so this is a very, you can say, convincing comparison between Indian markets, and you can compare. I have compared with Dow Jones, which is US markets. You can compare it with any other index or country's index. Indian markets are placed far better, far more better than any other global markets. So with this, I will like to stop my screen sharing. Okay, and I'm now open for questions. Rini, you are on mute.
Yes, thank you. Thank you so much, Girish, for sharing all the information, all the wonderful data that you presented, also with the analysis and insights. We have some questions here. Like you said, we're open for questions. I see some questions relating to your discussion. So, what are the charges that are associated with trading? They say, is it too costly for an NRI to trade?
No, it is not really very costly. Okay, so there are a lot of various institutes and academies that carry out. Yes, there are some institutes which charge you somewhere, like in terms of Indian rupees, they charge you around 2 to 3 lakh rupees. Okay, and obviously, as I said during the presentation, also you have to go through a lot of you have to go through their course content and all those things.
Yeah.
But with your permission, I will like to mention, Rini, that I am also a trainer and I do uh, do the carry out these trainings.
That's great. So you mentioned 2 to 3 lakh rupees would be the charges. Do you say per annum, or how are
No,
you
no, it is
measuring
it is it is about like they have their course content which they carry out for about one to max on an average they carry it at about say for 1.5 to 2 months,
it?
and
Mm-hmm.
after that they say that they give you hand holding or support for 1 year on an average. Okay, 8 to 12 months or 1 year on an average. So the charges are all inclusive for some of them, but because there is one phenomena you might have come across, which is funnel technique. Have you came across this? Okay, funnel technique. So what lot of trainers, what they have started doing is that they will offer you a very small course of 3 hours or say 2 days or 3 days initially for the cost of say 10,000 or 15,000 rupees, and then they will ask you to join next course, then they will ask you to join the next course and next and next and next, and finally you will end up spending a lot of money, and those stuffs are going on. That is why I said that you have to be very uh, selective which course to select and all. But yes, as far like if you have any questions related to what I teach, I'll be available for you. You can note down my and you can contact me anywhere anytime after this session.
Mm-hmm. Okay, that's great. And when you talk about charges, so charges associated for trading for an NRI.
Mhm.
So if I want to
For
trade,
okay,
what are the charges that I would?
brokerage. See, there
The
are
brokerage.
different brokers. Yeah, yeah.
Yeah.
So there are different brokers in India. Okay, there are some brokers which are like full service brokers, and there are some
Mhm.
brokers which are discount brokers. So
Yeah.
discount brokers, I can say like PaachPaisa.com, Zerodha, okay, or
Mm-hmm.
Angel One. These are discount brokers wherein your brokerage is very less. They charge you
Yeah.
brokerage per trade that you execute. Okay,
Mm-hmm.
and these brokers don't even charge any brokerage for your trades on delivery basis. Like if you buy any asset for on delivery basis, they don't charge any brokerage. Okay, during
Yeah.
entering, they might charge you something when you start selling those. Okay,
Okay.
so the brokerage on an average for these discount brokers is 20 rupees per trade. Say for
Mm-hmm.
example, you buy some stocks, so that
Yeah.
will be considered as one trade.
Yeah.
If you decide to sell that stock, say after 2 or 3 hours, if you are doing intraday trading, so that will be considered as second trade. So total for that particular trade, you will be charged 40 rupees plus some taxes. So roundabout, you can say for
Okay.
that one intraday trade, it will be charged 50 rupees with the discount brokers. But when it comes to full service brokers like Sher Khan, there are a lot of full service brokers. Okay, so
Mm-hmm.
they don't charge you per trade; they charge you in terms of percentage of your turnover, like what is your
Okay.
buying amount and what is your selling amount. They add it up to derive your turnover, and the
Yeah.
brokerage is around 15 paise or like a 0.15 15 paise per 100 rupees of your turnover. Okay,
Okay.
on an average.
Yeah. Okay. So what you mean to say is it is based on per transaction basis, correct?
Yeah, yeah, it depends upon how much bigger transaction you do. If your transaction is smaller, the brokerage will be smaller. If your
Mm-hmm.
transaction is bigger, your brokerage is bigger. But with discount brokers, it is different. Discount
Okay.
broker, they don't mind how bigger quantity you trade. If you want to trade one share, the brokerage will be same. If you want to buy and sell 1,000 shares, the brokerage will still remain same. That is 20 rupees
Okay.
on an average what most of the brokers are charging. Okay.
Okay.
And
Understood.
regarding like taxations, if you ask about, there are two taxes. Like for NRIs, there might be some different rules, but for
Mm-hmm.
uh, majorly there are two types of taxes that are those are incurred whatever you earn through your trading and investing. One is short-term capital gain, and one is
Yeah.
long-term capital gain. Okay. So long-term capital gain, the taxes are lesser, whereas short-term capital gain, the taxes are little higher than the long-term capital gains. So that also depends upon which income slab you fall into. So
Yeah.
that your CA will be the best person to guide you. So if you fall into the higher income category, then your taxes will be little more. But majorly, whatever income you generate through trading and investing, those are categorized in short term and long term. Okay. What is short
Okay.
term and long term? If, as I said, if you buy any stock, say for example Reliance Industries, and if you hold your position for more than 1 year,
Mm-hmm.
so if you sell that stocks after 1 year, that whatever revenue you generated, whatever revenue you generate from that investment, that will fall under long term capital gain. Okay.
Okay.
But if you decide to sell it before 1 year, that will fall under short term capital gain. So 1 year is the time frame. Whenever you invest, most of the big investors, they make sure that they stay invested for at least for 1 year. Okay. And as soon as the 1 year is completed, they will start selling and booking profits. Okay.
Okay. Okay. Good to understand. Okay, there's another person who's asking us how much time is needed to get a workable understanding of technical analysis.
It depends. It varies from person to person. But
Mm-hmm.
as per my experience, if you have a small basic knowledge, even if you don't have, it takes about 1 year for you to get workable knowledge. But after that 1 year also depends on, as I said, it depends upon every individual. There are some
Yeah.
traders who have started shining like within 6 months after learning,
Mm-hmm.
6 to 8 months. There are some who are still struggling, but
Yeah.
it depends. Like I always recommend not to leave unless and until you have good understanding, not to invest or not to take big risks. Once
Yeah.
there are some parameters by which you can uh, like summarize, or you can understand with your performance. Okay, there are some parameters. Once you fulfill all the parameters, whatever parameters I will be telling, what all the parameters are. Once you fulfill all the parameters, only then you should be like you can start trading with your full risk. Okay. But unless and until you fulfill that parameters, you should always stay in touch with your mentor. You should always stay in touch with your mentor for what? For sharing your analysis. Say for example, I will again go back to Reliance Industries. You might feel like Reliance Industries is very good to buy. Okay, you might do your own analysis and say that this is good price, I should buy Reliance Industries. Okay. But because you are new, you are inexperienced, you can discuss that with your mentor and take his guidance, whether you are right or wrong. That will help
Okay.
you narrow your risks and extract more of your investments. Okay. And
Okay.
gradually, as you increase it, it will on an average, it will take 8 to 12 months. From my side, I'll say 1 month, 1 year is more than sufficient. After 1 year, you should be able to do all the things all by yourself.
Okay. And one has to also do it regularly to be able to continue the grasping that they've
Um,
had for
See,
for this time.
obviously, success is proportional to the time one will give to the markets. It is
Yeah.
directly proportional. But practically, I do accept that it is not possible for everyone to sit in front of the markets entire day. And that is
Yeah.
also one misconception about the market. Whenever people think of trading and investing, they feel as if they will have to sit in front of the charts for whole day. No. See, once you learn technical analysis, even after completing your entire day of working, even not during the market hours, but after the market hours, you will need only 15 minutes on an average. If you have sufficient time, you can give 30 minutes or 40 minutes to to identify the opportunities that you can trade the next day. If
Mm.
you're thinking of short term, okay. If you're thinking of long term, you can just do your analysis, create alerts like XYZ. Say, for example, you want to invest in Reliance Trading Academy. You can read
Yeah.
Reliance Trading Academy chart. You can identify at what price. Whenever price reaches to that level, you should get an alert. Whenever that price reaches there, you will get an alert, and you can then
Mm-hmm.
make your decision when to enter. So it is like this is one also one major misunderstanding that people need to give more time. No, it is not like that. It is very simple, but obviously your success is directly proportional to your time that you give to the market. Yeah.
Okay.
Next question,
Great.
please.
Okay, I see no more relevant questions at this point. Just one question also about Rewire. Why Rewire to teach about Indian stock market? Well, I just want to say that Rewire is here to support all the expat communities, and support means also in terms of sharing knowledge. So Rewire is here to assist the expat community of Indians based across Europe, UK, Israel, to understand more about different topics. So today we are covering just the Indian financial markets as the topic, and maybe there are more things coming up. So stay tuned. Okay, I think there are no more questions here that I see. So we'll wind up the session. Thank you so much, Girish, for a
Thank
very
you.
insightful session, and I hope we can have more sessions with you another time, where people can have more questions and discuss with you other stuff. And that's it. Thank you so much, viewers, for joining us, and feel free to also write in more comments in the comment section below, even after the video is ended. I'm sure Girish will be happy to answer any questions that might be relevant. And yes, thank you for being a great audience.
Thank
Thank
you
you.
once
Have
again,
a
Rini.
nice day.
Thank you once again for the opportunity,
You're
and
welcome.
happy Diwali once again to everyone.
Happy Diwali to you too and your family. Bye.
Thanks. Thank you.